in 6 minutes starts now.
Thank you, Kirk.
Hi, Carrie.
Was it a rogue interrogation gone wrong? I'm Dave Anthony, Fox News. There are reports the Saudis may be willing to admit that in the presumed death of a missing journalist last seen in a Saudi consulate in Istanbul. Secretary of State Pompeo is in Saudi Arabia trying to get answers. Fox's Simon Owen monitoring live from London.
Dave, the State Department saying Mike Pompeo has expressed concern about the disappearance of Jamal Khashoggi and that he's thanked the Saudi king for his commitment to investigate it. The journalist's family is calling for an independent and impartial international investigation, saying they are anxiously following the conflicting news regarding Khashoggi's fate. In Istanbul, Turkish police have been searching the consulate and are expected to follow that with a visit to the Saudi consul's residence. Dave?
Simon, they're still trying to account for everyone. Nearly a week after Hurricane Michael pounded the Florida Panhandle, President Trump saw the damage firsthand yesterday there and in Georgia.
I've seen pictures, but it's hard to believe when you're above it in a plane and to see the total devastation.
Another body was found in obliterated Mexico Beach. It's now at least 19 deaths blamed on Michael as thousands try to salvage what they can and many more still wait for the power to come back on. Stormy Daniels loses one of her cases against President Trump. A federal court has thrown out her lawsuit claiming that he defamed the porn star in a tweet when he called her claim of a man confronting her in a parking lot a con job. The judge said it was speech protected by the First Amendment. Daniels also suing in another case the president and his ex-lawyer Michael Cohen over the payment before the election intended to keep her quiet about a claim of a sexual encounter with Donald Trump years before he was elected. 4 kids shot to death at their home in Tennessee. Their mother was found dead with them. It's believed to be a murder-suicide.
A family member actually came home and discovered the scene.
Murray County Sheriff Bucky Rowland, the 3 girls and 1 boy were homeschooled, aged 8 to 16. This is Fox News.
All money managers may seem pretty much the same. But while some money managers may recommend high-commission investment products, Fisher Investments avoids them. Some money managers may have hidden and layered fees. Fisher Investments never does. And while some money managers are happy to earn commissions from you, whether you do well or not, Fisher Investments fees are structured so we do better when you do better. In other words, we're structured to be on your side. Maybe that's why most of our clients come to us from other money managers. Talk with us and find out why so many experienced investors are switching to and staying with Fisher Investments. Fisher Investments, clearly better money management. Investments in securities involve the risk of loss. Visit us at FisherInvestments.com to find out what we can do for you.
As controversy grows about his administration's hiring of a former campaign worker accused of sexual assault by a volunteer who herself now works for the state, Governor Murphy has asked for 3 separate inquiries. He wants a Civil Service Commission division director to review all state policies and procedures for handling misconduct cases.
Based on what I now know, we handle this within the government context appropriately. I don't think that the rules of the road that guide that are sufficient.
Murphy says the transition office made a mistake by hiring a person who's been accused, and he commissioned an outside investigation of vetting and hiring procedures. A retired Middletown police officer charged with stealing political campaign signs. Police didn't specify if 73-year-old Irvin Beaver was stealing signs belonging to a particular candidate, but he is a registered Democrat who made an unsuccessful bid for the Assembly in 1989. A mail-in ballot issue in Atlantic County, the clerk's office says some residents may have gotten a ballot with the wrong return address printed on them, but the post office has been delivering them correctly. I'm Eric Scott. This is the Town Square News Network.
This is Tracy Thompson, New Jersey's acting insurance fraud prosecutor. Insurance fraud is providing false information to an insurance company in order to receive compensation or benefits. It may include filing a false claim or exaggerating damages, injuries, or other losses. Insurance fraud costs New Jerseyans billions of dollars every year. Together, we can stop it. Go to njInsuranceFraud.org for details. Insurance fraud. Report it, end it.
This week's forecast all about cool temperatures. It is breezy this morning, but that'll calm down this afternoon, and we'll see mostly cloudy skies all day here across South Jersey. Afternoon temperatures end up in the upper 50s or so. A chance for a shower tonight, still lots of clouds around. It'll be cool with lows in the mid-40s. Sunny, dry, and windy tomorrow, highs in the lower 60s. Thursday, the coolest day of the week. Frost is possible in the morning, then a brisk wind, mostly sunny skies, and highs only around 50. I'm Chief Meteorologist Dan Zarrow on WPGG Talk Radio 104.1.
From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 104.1.
We are back, and this just in. Traffic is building on Liebig Avenue in Galloway Township. I am Hurley in the Morning. Kirk Conover staying for a little bit. He will not be participating during Chuck's program, but he is here. Chuck Malamut, the official, the exclusive financial advisor for the Hurley in the Morning program. He's the managing director. He leads the Malamut Group at Morgan Stanley's Northfield, New Jersey office. This program is sponsored by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. Chuck, welcome to your program. How are you?
Good morning, Harry. Kirk, good morning.
Great to see you, Chuck.
What a difference a week makes.
How about that? But your pocket Kreskin has been saying all along what the reason is, but we'll get to that. Market update.
I think you and Kirk kind of beat that to death in the last hour. So,
but we didn't have your expertise. So
last week. I mean, it doesn't. I don't think I'm going to give your listeners any news that they don't know already. I mean, it was the toughest week that we've had in the in the last several years. I mean, the S&P was down 4.1%. I mean, and if you look at
the Dow was down 5%.
Yeah, and if you look at the way the Dow traded in particular, I believe it was on Tuesday. And at the end of the day, starting around 2:30, as you're watching the indexes go the wrong way, you saw the program trading, the algorithms starting to kick in, as you never got to the point in time where the Dow had any shot of recovering, on Tuesday, and then. As you got to the end of the day, you had what I'll describe nothing short of that total meltdown, where the markets just went the wrong way with follow through in Asia and Europe, and then ultimately follow through Wednesday, Thursday, and then Friday we did have a recovery day. So if you look back at the last 8 trading sessions, 6 of those have been negative.
Yeah.
Both in the Dow and the S&P.
I know you don't sweat it day by day because we shouldn't, and you've given great counsel for 27 years on this program and even before then. But I was happy when Friday came along and the markets actually had an up day. I thought that was important going into the weekend.
It was, and if you look at Friday in particular, and we traded during the day, plus minus, and there were several times where you just thought that the market, around lunchtime or so, was going to sort of just give up the gains. And as we got into the afternoon, you would have, again, more selling going into the weekend because oftentimes a lot of institutional traders do not want to be long through the weekend because you never know what can transpire. So, but the result was, we did have a positive day on Friday, but things were better, things were higher, earlier in the morning on Friday. So, the S&P, the Dow Jones, the NASDAQ, obviously all losers last week, anywhere from minus 3.7 to 4.2%, which kind of took your gains for the year and just sort of sliced them in half. I mean, the S&P's up 5, the Dow's up 4, the NASDAQ's up about 9.5. The Russell 2000, which are your small caps, which is, kind of relating to like more mid and small businesses, I mean, that is a little frustrating. The fact that year to date, it's only up 1.7%. So the key is, with the action that has been taken, by the Fed, are we at the point in time where we're sort of choking ourselves off, with these rate increases? I mean, obviously the president says one thing, Fed Chairman Powell will say something different. They are quasi-independent, or so they say. I mean, I know that you have a completely different opinion of the Fed with respect to the way they handle themselves. But I mean, the fact of the matter is, did they go too far too fast? I mean, that's pretty much what we're looking at right now.
And your sidekick, your pocket Kreskin, has been saying that all along. And I think this was the one. This is where it's going to get very interesting, because I want to offer Mr. Malamut an apology, because I said before Kirk arrived in my opening monologue, then I said it while Kirk was here in hour number 2, that Chuck is going to be talking about the 3 causes of last week's sell-off, and that my answer is there was only one reason, and that was the Fed raising interest rates too fast. But in fairness, Chuck is the expert, and I do want to hear your 3 causes, although I still believe that the one reason is the Fed raising interest rates too fast, which I wrote on my little sheet next to where Chuck had.
You're going to archive that and put it on the wall here, Harry?
Probably.
And autograph it? And
I'll have you autograph
put your
it.
picture next to it?
Yes.
Okay, all right,
yes.
Good. All right, make sure you get a nice frame. But
thanks.
There were 3 reasons we think that caused the sell-off. I mean, you and Kirk, covered it, I think, pretty effectively the last hour.
Thank you.
The fact that Powell said that the policy was far from neutral indicated that the Fed could move past neutrality, so to speak, as it raises rates. So that
anybody want to bet a pizza for charity that they're not going to raise the interest rates any more this year? Anybody want to bet a pizza?
I'm not going to go there right now, Harry.
They were going to, though.
Well, look,
they're not going to do it
bets
now.
All bets were in that come December there would be another rate increase.
But I think the combination of what this did, the president, even though they're separate and all this, the president just crushing them for what they did, I don't think they will dare raise interest rates in December.
So the fact, I mean...
And I'm willing to put a pizza on the line for the Absecon Presbyterian Church.
Well, what market
for
technicians were thinking about or stating the fact that rates went too far too fast. And if you look at what happened with the 10-year 10-year Treasury in particular, the fact that we went from basically flattish at around 3% to almost 3.25%, it was basically like a straight shot up, and then it's since settled down to about that 3.17 level. Investors got pretty much unnerved at that point in time, and the fear, the corporate borrowings could become more expensive, which would ultimately cut into earnings. So, and that is the second reason that we looked at what happened last week. The fact this ongoing worry about corporate earnings. Now, if you look today, for instance, I think Johnson & Johnson, BlackRock, Morgan Stanley, to name a few, came with earnings. Yesterday, Bank of America, Friday, Citigroup, Wells Fargo, and I'm missing the third. Citibank, actually. For the most part, they beat, and they beat fairly well. I mean, I think the one outlier was actually PNC, which missed, and it's like anything else, you miss. In spite of what's happening in the market, they're going to take your stock out to the woodshed and actually destroy you, and that's what happened with PNC. But all indications so far, the third quarter earnings should be strong. But again, what are we going to match up against? You think about what's been created in the first half of this year. We had a very, very healthy 2 quarters of earnings, and this has caused investors to think, well, maybe earnings have sort of peaked out here, and remember, we always talk about looking through the rearview mirror. You can't do that 24/7, but investors are now looking and saying, well, geez, the best has happened. What is now going to happen in the future? So, corporate guidance. That's the other thing that we look at when companies report. What What are these corporations saying that they think will be happening in the future? Sort of the key takeaways, high labor costs, high freight costs, climbing raw materials, and climbing commodity prices. I mean, you put that combination together, then it doesn't take much to figure out that Q4 of this year is probably maybe not going to match up to what happened the first 3 quarters of this year. And then the last thing...
Don't you always hate to lose the year in the fourth quarter, though? That's, sad.
Well, kind of like the San Francisco 49ers last night.
Yeah.
I know you weren't awake, but I happened to be up and watched.
I did stay as long as I could. But
and watch that. But anyway, I know your brother's very happy about that.
Oh, he texted me.
But and the other thing that happened, we think, last week, and I kind of mentioned it as we started, in the beginning of today's program, is that, very similar to what happened at the beginning of the year in January and February. You had the program selling, you had the quantitative trading, you had forced selling from margin accounts, you had forced selling from leverage funds, and that basically accelerated the pace and the magnitude of the declines. And I think, Harry, was clearly evident on day one.
When you say 3 causes of last week's sell-off, I'm willing to accept a lot of this, but what put it over the top, though, was the rate increase.
Well, I'm not going to I'm not going to agree with you in totality, because there was more than one reason. I mean, you think of the fact that if these corporations are coming with earnings, and the fact of the matter is that they're saying they're faced with higher costs.
But how about this, Chuck?
Ultimately, let me finish for a second, which could ultimately create lower earnings. And if you look at what happened with the market, I mean, the market prices itself to perfection.
But if last week's rate increase doesn't happen, I submit Wednesday, Thursday would not have happened.
I'm maybe not in totality. I mean, maybe it would not have been as significant. I think that we were due. I mean, you think of the fact that we put in all-time highs with the Dow Jones, just like 2 weeks prior. Everybody, a lot of institutions, a lot of individuals get complacent, and ultimately, what happens when you get complacent, you end up getting kicked in the teeth.
Chuck Malamut, for all of your financial planning needs, you can call 609-383-2010, 609-383-2010. All of your financial planning needs, 609-383-2010. We'll be back in just a few minutes.
Early in the morning, WPG Talk Radio 104.1.
At Ocean First Bank, our first thought is you. We put you first in all we do. Community banking for a century. We treat you like your family. Whatever you need, whatever you dream, let's make it a reality. Ocean First Bank, putting you first.
For a limited time, earn up to $200 when you open a Simply Great checking account. The account with unlimited domestic ATM fee rebates. Just use your debit card, make a mobile check deposit, and keep your account open for at least 6 months. It's that easy.
Whatever you need, whatever you dream, let's make it a reality. Ocean First Bank, putting you first.
Certain rules and restrictions apply. Visit oceanfirst.com for complete details. Member FDIC, Equal Housing Opportunity Lender.
This is Harry Hurley for All Season Solar, our official and exclusive solar energy provider to the Hurley in the Morning program. They design and they install the most attractive, efficient, state-of-the-art solar photovoltaic systems from the world's leading manufacturers. What I love about dealing with All Season Solar, they're your single point of contact. They do the system design, engineering, your building permits, installation, and the ultimate glorious utility connection day. They take care of everything under the sun so that you can sit back and reap the savings. Call Frank Neal today, 609-317-5491. That's Frank Neal, All Season Solar, 609-317-5491. There's never been a better time to go solar. The benefits are there. New Jersey leads the East Coast and second largest in the entire United States in terms of solar energy panel installation. No deposits, no hidden fees, no out-of-pocket costs. All Season Solar. Tell them Hurley in the Morning sent you.
Hey, Sean Hannity here. You tired of taking huge vitamin tablets? Unlike most vitamins, which are packed with binders and fillers and non-active ingredients, Superior Source microlingual tablets feature only the most important active ingredients and are GMO-free. Now, most Superior Source microlingual tablets are smaller than a pea, and they dissolve instantly in your mouth. No water necessary. Superior Source microlingual instant dissolved tablets are available online or at Sprouts, Vitamin Shops, and other fine stores.
You wouldn't put a square peg in a round hole, so why would you deploy a traditional firewall in a modern decentralized network? Firewalls have new requirements for businesses leveraging SaaS-based applications and public cloud platforms like AWS, Azure, and Google Cloud. We're in the cloud generation now, so your firewalls have to be engineered to fit right in. Reclaim your cloud network. Try a Barracuda Cloud Generation Network or application firewall free at barracuda.com/firewalls.
Hi, it's Brian Kilmeade. Join me later this morning at 10. Now back to Harry Hurley on WPG Talk Radio 104.1.
We're back. Chuck Malamut continues all about your financial matters. Chuck, this is another, I think, dynamic part of your program in terms of educating your listeners. What has changed recently? What hasn't?
Well, I think there's no doubt about it that monetary policy, is now shifting. I mean, you think about we had low interest rates for an extended period of time, as you oftentimes refer to the new norm.
Yeah.
That 1 or 2% GDP growth. Quantitative easing, that has all sort of fallen, not fallen by the wayside, but it's ceased and desist. And as a result of that, we now have tighter monetary policy. And so the dislocations within that tighter monetary policy, it's pretty evident. And it seems like the stock market is now sort of caught up, to what these shifts have been as investors sort of reassess what the Fed is doing, which takes us back to number one as to what happened with the sell-off in the stock market last week. And the second thing that might have happened here is that you've had again rising rates and inflation, tighter financial conditions. You think about how easy it was to borrow just 3 or 4 years ago. The Fed's going to increase rates. We think anywhere to that 2.5% to 3% range before they pause. Now, you and Kirk obviously think a little bit different. I think all bets are off right now. I mean, until we work through, because I know that you have said on more than one occasion that you think this is absolutely political, but you do have the midterms coming in a relatively short period of time, and then shortly thereafter, beginning of December, the Fed comes back. Powell said it, and maybe, you oftentimes compare, one Fed governor to another, Fed chair to another. I mean, I know that the president was not terribly complimentary of Janet Yellen. We have had a number of discussions about Bernanke. We've had a number of discussions about Alan Greenspan. But I think the comments that Powell recently made, suggested that rates, could climb higher, especially if we begin to see some inflation come back into the picture. And then, so the Fed right now is obviously very hawkish, with respect to these rates. And, not that they're looking at the stock market, and not that they're looking at what happened to the 10-year Treasury over a relatively short period of time, but I think, you can't be looking, wearing sunglasses all day long in a dark room. So I think that they are taking solace with the fact that what's happened here, in the equity markets.
But as they do raise the interest rates, there's a byproduct as well, because yields also raise on the fixed instruments. So people are going to be seeing more in their Social Security for the first time in a long time. I've seen some of the estimates are, $40 extra maybe per month for an average Social Security recipient. And, of course, this impacts the next item that you're going to bring up, the bond market.
Well, yeah, but I'm not quite
Okay.
I'm not quite there yet. I think what happened was also, the question is, interest rates. They did increase. They went the 10-year going 17 to 25 basis points very, very quickly, and that took a lot of the fear out of that flattening, soon-to-be inverted yield curve. So the yield curve is now, if you look, it's still rather flattish, but it's not inverted, which certainly is not pointing towards a recession. And
so you could actually make the case that the moves are staving off a recession.
Well, I don't know if they're staving off recession. I mean, by historical standards, oftentimes refer to the yield curve.
Yeah.
The fact is that where I think.
But if we were headed for inverted, and now it's flattening, this is a positive development.
It is positive. What happened last week is that rates, like I said, move very, very quickly. You don't move 25 basis points in a matter of it seemed like hours. Mm-hmm. And stocks, we've gotten accustomed to rate increases moving gradually. But, over the last month, what happened is that these yields spiked faster than anyone had anticipated, helping that current dislocation with respect to sort of a decoupling of stocks versus bonds. And the other thing that happened here, we've seen tax cuts, we've seen increased federal spending. They obviously have increased growth. Now, is that one side oftentimes referred to as a sugar high? It's just like a one-time event that's eventually going to wear off and then crash. I mean, we've heard that before. The other thing that can happen is, with the assistance of this stimulating the fiscal policy, it ultimately puts upward pressure on inflation, and the Fed then needs to become more hawkish because they're very, very concerned about an overheating economy. So, when you look at all this, we don't see signs of serious economic or financial problems. I mean, one of the things when the market did what it did last week, the immediate thought is, oh my goodness, we're going to end up with 1 or 2 quarters of no growth, negative growth with GDP, and ultimately the end result is we end up in a recession. We don't think that's going to happen. We think what we lived through, we're living through right now, is very similar to January, February. It's short-lived. It's a correction in a long-standing bull market. Harry, Kirk, there have been a number of occasions where we've had these moves of 1% or more on a daily basis, 5% or more, and a number of days to get that accomplished. And the fact of the matter is, if you look historically, and if you can't get out, if you can't stand the heat, you got to get out of the kitchen.
And I think what people are getting attuned to is losing 1,300 points on the Dow over 2 days when it's 26,000 isn't like October of 1987. I think that was the year.
It was October.
Yeah,
yep.
I was in Disney World actually, and I didn't. Just to show you the difference between then and now, I didn't hear about it till I came back. We were a much simpler time. Somewhere around the middle of October of 1987, if I remember correctly.
It was like the 15th to 20th. I think the one thing you have to,
and that was 500 in some points, if I remember.
But it was
correctly.
20. It was
like 25%.
25 to 40. I don't remember the exact number, but it was a big percentage move. So, but to sort of key off of that, if you look at where we are right now, we've moved down about 7% from the all-time highs that we put in. Other developed markets are off fairly significantly, about 15% in your emerging markets have sold off more than 20% since the highs they put in back in January. So the safe haven still happens to be here in the U.S. There is a dislocation. The other thing that was chatted about a year ago, the global economy moving in check with each other, sort of lockstep moves, that has not happened. If you look at performance outside the U.S., they're pretty much all negative returns. I mean, I think we mentioned this before. China in particular, down about 25% year to date. The MSCI emerging markets down about 13%. Hong Kong down about 11%. Europe down about anywhere from 8.5% to 9.5%. So, in spite of how awful it feels, what we witnessed lived through last week, the fact of the matter is, I think we're still in a lot better shape, economically speaking, than what's happening outside the U.S.
29 minutes past the hour. We're coming right back in just a few minutes more with Chuck Malamut, the exclusive financial advisor for the Hurley in the Morning program. 609-383-2010. That's the phone number to call Chuck to talk about all of your financial planning needs. I can't help but repeat what I said a moment ago. October of 1987, I believe, was a 25% drop. I'm going to look it up during the couple-of-minute break. nobody, we were there for about a week, I think it was. Nobody in Disney World, nobody was talking, oh my God, the markets are down 25%. They shut them down, all this. They broke Wall Street. I mean, nothing. Nobody said anything. Today, if anything, now we have all these curbs and things. It probably couldn't happen the way it happened. And there were no curbs back then, Chuck. It just kept going until the day ended.
Harry, it's all about technology.
Yeah.
The fact of the matter is,
nobody was talking about
it. You were disconnected. You were on vacation.
Yes.
You saw the paper.
It was shut off.
You didn't have the internet. I mean,
now that's how things have changed.
We get too much information too quickly, and ultimately, sometimes what we do.
Doesn't it make your job harder, actually?
Well, it's harder because our investors, clients, are so terribly focused on the next tick of the S&P or the Dow or the Nasdaq, they lose focus on what we're trying to accomplish long term.
You lose focus long term for the short term.
Look, how many times have we said it? This is a marathon. This is not a sprint.
Very good. 30 minutes past the hour. We'll be right back.
Ready to win $5,000 with WPG Talk Radio 104.1? Play the New Jersey Lottery Scavenger Hunt. Simply open the WPG Talk Radio app on your phone, tap on the Lottery Hunt icon, then complete challenges to earn points for your chance to win a New Jersey Lottery Spooktacular swag bag or the grand prize of $5,000. Play the New Jersey Lottery Scavenger Hunt. Anything can happen in Jersey with WPG Talk Radio 104.1.
Paul D'Amato.
Harry Hurley.
Paul, I know our listeners want to know what's new with the D'Amato Law Firm.
Things are great, Harry. We are so privileged to represent our clients whose lives have been turned upside down because they were involved in a serious accident. We meet on a regular basis. We copy our clients on all our correspondence so they always know what's going on with their case. We try to treat them like family. We have Alexa here, my daughter. I'm so happy that she's here. We have Steve Van Natten and Casey Gifford. We're a great legal team.
They're the D'Amato Law Firm for all of your personal injury legal needs. Turn to the official lead counsel to the Hurley in the Morning program for more than a quarter of a century. The D'Amato Law Firm in Egg Harbor Township, 609-926-3300. That's 609-926-3300. Tell Paul, Alexa, Sandy, the entire team that Hurley in the Morning sent you.
We sent Republican Tom MacArthur to Washington to protect us, but he was the chief architect of a bill that would decimate our health care. MacArthur voted to cut health care for 300,000 New Jersey residents, strip protections for people with pre-existing conditions, and give huge tax cuts to the ultra-rich. We've had enough of Tom MacArthur. November 6th, vote for someone who will stand up for New Jersey. Democrat Andy Kim. Paid for by Hotel Workers for Stronger Communities, www.hotelworkersforstronger.communities.com, which is responsible for the content of this advertising, not authorized by any candidate or candidates committee.
24/7, 365. You're up and at 'em every day, so you don't want something like Medicare Part D to slow you down. At Walgreens, we'll take care of your Medicare Part D prescriptions, saving you time and money. Make the switch to Walgreens today and get more by earning 100 balance reward points and save up to $5 on each Medicare Part D prescription when Walgreens is your preferred pharmacy. Walgreens, trusted since 1901. Prescription savings applies to Tier 1 generics when you fill at a preferred versus a non-preferred pharmacy on select plans. Points can't be earned in New York, New Jersey, or Arkansas. Other restrictions and limitations apply.
Hurley in the Morning. WPG Talk Radio 104.1.
Welcome back. Chuck Malamut is here for all of your financial planning needs. Dial 609-383-2010. Chuck, you were on such a roll. Did you like delve right into the bond market during
I
the
think we covered it. I mean,
Yeah.
I think it's pretty evident and obvious that rates are on the rise, and it's just a matter of how much the market can stand, so to speak.
When rates are on the rise, should you take full advantage of the yield potential?
Well, absolutely. I mean, you think about for so many years, savers and saving, just your traditional savings accounts, your money market funds were yielding next to nothing. And remember, there was a conversation that went on for several months about how
charging you.
Yeah, I mean that's what they did back. That's what they've done in Germany, I believe. So the fact of the matter is now you are being paid, to have your money, in savings or money market funds, and I think it would what we would not do is go out and buy a 30-year piece of paper. That doesn't make much sense, but we're more focused on the shorter end of the yield curve because we think there's some value there. Now the question
How about
is,
like 3, 5, and 10 type stuff?
Yeah, that's what I'm saying. We'll do up to intermediate term, which is typically maturities up to 10 years. And it all depends what the circumstances are. But it's painfully obvious to bond investors because their valuations are down year to date as well, anywhere from say 1 to 3%. So you clip your coupon. You most of the time you buy the security to own the security and hold the security, and at the end, you're paid your principal back. Barring any unforeseen circumstances within a corporation.
I remember commenting to you that I thought it was unusual. I never bothered to check how unusual it is, but all 30 Dow stocks were down on the same day. I understand it's not unprecedented, but that it's rare for that to be the case. Your next topic is a reevaluation of stock prices.
Yeah, I mean, oftentimes, what investors lose sight of, lose sight over is the fact that they oftentimes ignore price earnings ratios. As it turns out, the downturn that we had in stocks over the last week, created an impact on these valuations, and now stocks are trading significantly discount to the valuations that we saw earlier this year. Based on expected earnings, the S&P 500 is now trading at a P of about 16.8. It's about 10% below the level that we had at the end of this past January. But at the same time, the S&P, fell around 5%, from January, February to where we are now. So what has happened is that the P's gotten 5.4%, Harry, more attractive than the falling price alone would warrant. So I think that's sort of another indicator that if you were considering entering the equity market, it's probably or adding to the equity market is probably not a bad time. So earnings obviously are going to drive this number as well. Lower corporate tax rates, strong overall economic growth, profitability that we've seen from declining raw material prices up until just now. And relatively moderate growth in wages, that should help equities. I think one of the things that we always are faced with is that nobody likes to see a negative rate of return. Nobody likes to see their assets go backwards, not forwards. And I think what's happening right now is that we're just sort of like I guess for lack of better words, sort of like treading water. Especially if you have a balanced account which owns fixed income, which has gone backwards this year, sort of offset, by the slight increase in equity prices. You think about the gains that we had put in up until last week were just borderline double digit, except the NASDAQ, which was, around, 12, 14%, and we gave it up, very, very quickly. In a matter of 4 or 5 days, the market repriced itself.
We're at 37 minutes past the hour. You're listening to Chuck Malamut talking all about your financial matters. And this sounds self-evident, but it still requires our expert to describe what it means, volatility being on the rise.
Yeah, so when you look at volatility, Harry, the fact of the matter is that daily market moves of 1%, either up or down, are not uncommon. They occur on average about 62 times a year, and that's been sort of been out there since 1980. So you have almost 40 years of history, looking at the market. We've seen 39 moves this year of 1% or more, and it seems investors are very, very anxious. And you say, well, geez, we should be used to this because we're down 62 times, not down, moves 62 times, over the course of 1 year. It seems like, every 4 or 5 days, we're going to get that kind of move. The fact of the matter is that when you look at 2017, we virtually had no volatility.
Right.
We had maybe 4, 6, maximum 10 days where we had movements. So I think what happened is that, we which is well below the historical average. So, we now get a little amped up because we're thinking and we're saying, oh my goodness, look what happened in the market. We've had 2 times this year we've had corrections of 5% or more. January, February, and now. That's not uncommon, and so the question that oftentimes is being asked: are we now entering a bear market, or is the bull market just sort of taking a pause and retrenching itself to make higher highs? I think what investors need to think about, this time, Harry, is oftentimes when things go down, investors have a tendency to want to, basically sell out their equities. And they might feel good, temporarily. Oh my goodness, okay. Rather than, other than history has shown back when we had the Great Recession, most of the times it did not really work out for you. And it didn't work out for you if you did in fact sell out, in the summer of 2009. So,
because you capture losses at that point.
Yeah, so look, I don't think it takes much to figure out the economy right now is at the latter stages of its cycle. So, you got to make certain that your portfolios are well balanced. You just don't own, one asset class. We talked about this shift from growth to value. I mean, it's pretty obvious and evident is happening right now as dividends become more important. And you still need to stay diversified throughout the process.
I think you kind of said it, but I'm going to impress upon it anyhow for you to comment. The longest bull market in American history. Now, it's still ongoing. What do we do for an encore? What do you do?
Well, I think the situation is. I mean, if you look, for instance, and I'm going to give you this one chart to take a look at.
Thank you, Chuck.
Props. Harry, I'll tell you what. You do an exceptional job in a lot of things, but I think that, and that is a compliment. I don't know if you're paying attention.
I'm pleased.
Okay, you might want to archive that and save it. But
Chris Coleman, 8:40 and 45 seconds.
But I think
first compliment in 40 years.
That's not true. I think what you do a really good job is you sort of paint the picture.
Yeah.
So I gave you this
because radio is the theater of the mind.
So what I want you to do is describe to your listeners what I just handed you. We in our world describe it as a mountain chart.
I love it.
And I think the one thing, you go ahead and I'll conclude.
Here's what Chuck has. It is. I have to say that on an 8.5 by 11 sheet of paper, it is some of the most clear and concise information. Actually, I'd like to get a copy of it. It's so helpful because, all right, so you have, if you picture a graph, you have the dollar value 0 to 25,000. Then on the bottom part of the graph, you have starting in year 2008 through the present 2018. And then you have this mountain graph that has some peaks and valleys, but it's pretty steadily going up. But then it might come down, but then it goes up again, and so on and so forth. Almost like, not EKG because it's more of a mountain graph than it is straight line EKG. But what Chuck has here is all kinds of important mile markers, significant events, geopolitical events, other events, everything from the Boston Marathon bombing, sort of in the middle of 2018 through 2018, when that happened in year 2013, moves that the Fed might make, Meredith Whitney's predictions about municipal bonds, the California drought. Chuck, this is an awesome document.
But you can have that, Harry.
Thank you.
And what I want to point out is that if you look, this is basically,
and it's an S&P 500 index.
And it's 10 years.
Yeah.
Ending this past September 28th. But I think the one thing to note is in spite of all those actions, and you can see, again, sort of that mountain chart where you start and you start with basically 10,000, you end up with 25,000. It's a fact that the S&P on average has returned just shy of 9% per year in spite of everything. The other thing
this is great.
I want to give to you, Harry, and if your listeners want any of this, they can I guess just
call you.
They can email me, they can call. And we'll be more than happy to send it. This
609-383-2010, 609-383-2010. And does this not what I call the Malamut doctrine, staying the course? If this is not evidence of what you talk about, and that's not time. It's time in the market, not trying to time the market.
Yeah. So what we did is we looked at intra-year movements. Pluses and minuses, and I think, other than 2008, where The market at one point in time was down 49%, but ended up being down about 38% for that particular. I mean, there are years, Harry, where 2017, for instance, intra-year declines, down 3% at one point in time, but ultimately up 19%, for the year. And I think what happens is, if you go to the sidelines, you miss. You might feel good, but ultimately, you miss these moves. And I don't have the numbers in front of me, Harry, but they're, we talked about the number of days being out of the market and how it impacts.
Oh my gosh, it was just you said like 4 days or
yeah,
something.
Yeah, you cut your returns in half, and I think this is, again, something that's very, very important that your listeners need to be made aware of. So
folks are already asking for these.
One of the
really
probably the best thing to do, Harry, if you just send me their emails, or if your listeners want to email me, charles.malamut@morganstanley.com, be more than happy to send those over to them.
Fantastic.
Speaking about staying in the market, I mean, the sage of investors is what obviously Warren Buffett. And you think about Warren Buffett put a piece out right before the market crashed in 2008, and he basically, if you remember, his comments were, and this was actually we're now on a 10-year anniversary of this. Buy American, I am. That was the name of the piece that he put out in the New York Times. He said to investors, be fearful when others are greedy, and be greedy when others are fearful. So the letter was released less than 5 months before the stock market bottomed in March of 2009, which ended up, having a 57% decline in the S&P 500. The S&P closed at 946 in the middle of October when he wrote this piece in 2008, and has more than tripled, from that point in time. So, again, another case in point of just trying to stay on track, and I think a lot of this, Harry, without goal setting, it makes no sense to invest money. I mean, other than going to a party and telling your friends how brilliant you are, and all the great moves that you made, and you got out of the market at the right time, you got into the market at the right time, and that kind of reminds me of why Atlantic City has multiple casinos, and all these other jurisdictions in Pennsylvania, New York, and Florida, and obviously Nevada have casinos, because people know when to get in and people know when to get out. So obviously, I think you and I missed the boat on that one. But this is kind of interesting. I'm going to keep moving because it looks like you're pretty busy.
Well, actually, I'm responding to Dr. Newkirk. He and I are chatting. I'm loving the show. More money for college
grads,
this
is really interesting. I've said,
look out.
Employers, about 700 employers were surveyed in the first quarter of 2018. They are contemplating offering a starting base salary of $65,000 to college grads that have a bachelor's degree. 85,000, they're coming, directly, from the industry, and 105,000, Harry, to MBA graduates. Ooh. So I think there's a lot to be said about, getting your credentials in place, because it's evident now we got obviously a very, very tight labor market. So, you interview well, chances are, you're going to end up with a pretty decent starting salary.
What a difference, Chuck.
Oh, it's within the last 10 years. It's remarkable. I mean, I oftentimes
you and I were talking about you couldn't get enough degrees, and there was still not a job waiting.
Farrah Fawcett posters in your parents' basements. Did I got that right? You have a pretty good memory, right?
Yeah.
So,
what color was that bathing suit, Chuck?
I believe it was orange, reddish.
Yes. Yes.
I'm not sure.
Good
Something like that.
Yes. Good for you, man. I'm proud of you.
There's a lot of things that we forget, but Harry, there's a few things that we remember. So that was one of them.
Beautiful.
I'm going to move from college, from earning money to obviously saving money, and then when you get to the latter stages of life, when you have these life-changing events where one of the spouses dies, and I just found this amazing, Harry. 53% of widows right now, admit that their deceased husbands had no financial plan in place when that person passed away in the event that either spouse died. So I think the fact of the matter is, with all the changes in the tax laws, you really need to get yourself organized because the other thing that's happening, we've talked about life expectancy and how that has increased, but the fact is, you will, unfortunately, we all will pass away at some point in time. A 65-year-old American male today is going to live another almost 20 years. That's an increase of 5 years over the last 40 years. A 65-year-old American female is going to live about 21.6 years, an increase of 3 years over the last 40. So it's very evident.
And your actuarials are actually going out to what years now? Crazy late.
So 86 for a female, 84.2 for a male. But it's pretty interesting when we run it's called LifeView. When we run our retirement analysis for our clients and prospective clients, it actually defaults to the female living to like 93 and the man living to 91.
Well, that's good because you're planning well in case that's the fact, even though that's above the average, let's say, that's not above reality. And the days of the reason 65 was set for Social Security, Chuck, a lot of people didn't even make it to 65.
Exactly. Now, speaking of which, planning well,
thank you.
Let's talk about how poorly the Congressional Budget Office has planned has done their forecasting. I mean,
if they actually had to be held accountable to their work performance, they would be terminated.
And
that's
then
how
some.
bad they are.
So you think about this: the 10-year forecast in January 2008 regarding our national debt. They thought we would be right now at $12.7 trillion. I think, Harry, that's just a slight differential from the actual national debt, which is now at $21.5 trillion. I mean, how can you miss? I mean, it almost doubled.
And we're adding $1 trillion automatically every year.
So
that's the deficit each year. I'm not even counting interest on the debt. Our budget is overspending by $1 trillion every year.
But I think you're absolutely correct in the fact of the matter that, they would, if they were in the private sector, they would have been fired years and years ago. They've probably been fired after 6 months.
For non-performance.
And sort of the last topic I want to just chat about for a second
this is celebrated if you're in this crowd.
It is. The good news is that American homeowners are really working a lot harder to reduce or pay down or eliminate their debt. In 2011, about 34% of American homeowners own their homes free and clear, no debt, no mortgage, no HELOC, no loan.
That's a beautiful feeling, isn't it, Chuck?
It's remarkable. And then just 7 years later, 2017. 40% of American homeowners own their homes free and clear of any debt. So that's, everything that came out of the financial crisis wasn't necessarily, I mean, it was bad, but the fact of the matter is that people
became focused,
more focused on not having debt or using debt efficiently and effectively.
Chuck, something that I talk to people about, I can't say a lot anymore, but I used to do it more than I do it lately. If you make one extra mortgage payment a year and you apply it to principal, so you're making your regular monthly payment, or some people are doing the biweekly, and that also actually will reduce the length of time of your mortgage, but one extra mortgage payment per year. So if you say you get a bonus every year, or you just put aside a certain amount, if you do that one time during the year, you're going to knock 5 years off your mortgage.
That's assuming a 30-year mortgage.
Yes.
Yeah.
Yes.
I mean,
which a lot of people have.
What's happening, what has happened, and what continues to happen is that the 30 years quote the traditional mortgage. I mean, there's just so many mortgages are now continue interest only.
But what's also beautiful, I mean, and we did it, as you well know, because we talked to you about it while we were doing it. We knocked off 5 years and then some in 2 different moves that we made with Brother Bill.
I think the only thing that that your listeners need to be made aware of in a fixed rate product like a 15, 30-year fixed rate, and there's nothing. I mean, look, I agree. It's great if you can pay down principal.
Yeah.
And when you're in the loan, it's not. People oftentimes get confused because what you're doing is you're taking your payments off the back end.
Yeah.
And your monthly payment remains the same.
Correct.
I think the confusion is when you have these interest-only deals, or you have the principal and interest with a shorter term that can reset. During that 30-year period, that oftentimes you make those payments on what we refer to as the P&I, the amortizing loans. It doesn't reset. It doesn't reset your monthly payment.
30 seconds, closing comment.
So, Harry, look, I think we got through a lot. I mean, it's
your entire list and then some.
The fact of the matter is, I think this is truly a point in time where your listeners need to be patient. It takes time to build a portfolio. It takes time to invest your money effectively. Don't let all the noise get in the way. And this is a really good time to certainly, if you haven't done it, to reassess your goals.
Hence what I love talking about, what I call the Malamut doctrine of spend time in the market. Don't try to time the market, and you'll do well. 609-383-2010, 609-383-2010 for all of your financial planning needs. We'll be back in a few minutes. I believe Dr. Newkirk is in surgery. When Chuck said Harry was busy, Dr. Newkirk and I were texting each other. Dr. Newkirk is in surgery. I think we're going to have wide open forum coming up next hour.
Early in the morning, WPG Talk Radio 104.1 and on the WPG Talk Radio app.
Health Update with Robin Stoloff, brought to you by Atlanticare, a member of Geisinger.
As reports of sexual harassment by men in powerful positions continue to make headlines, more women are beginning to speak out. However, it's estimated that 1 in 3 women have been sexually harassed, and the majority of them do not report it. And it's not hard to understand why. Many victims fear they will be blamed, nothing will be done, or that they'll face retaliation, including losing their job. Hopefully, more businesses will offer training and education about workplace harassment and create a safe work environment that discourages this behavior. As victims of sexual harassment and abuse come forward and more harassers face consequences, we should feel empowered to speak out and stand up against it. If you need help, contact the National Sexual Assault Hotline at 1-800-656-HOPE. I'm Robin Stoloff for Health Update.
Health Update with Robin Stoloff, brought to you by Atlanticare, a member of Geisinger. Call 1-888-569-1000 or visit Atlanticare.org.
How do you describe fun? Is it relaxing by the beach year-round at Landshark Bar and Grill? Is it a hot streak followed by frozen drinks at Jimmy Buffett's Margaritaville? Is it award-winning gourmet dining and live music and over 800 new slots and all the above? Find your fun at Resorts Casino Hotel, a Mohegan Sun property in Atlantic City. And with over $100 million in new renovations, there's more fun than ever. Get started at resortsac.com. Gambling problem? Call 1-800-GAMBLER.
Now more than ever, we need problem solvers in Washington because partisan politics is failing us. Hello, I'm Jeff Van Drew, and for years I've been proud to represent South Jersey and fight for our region. I took on leaders in my own party to stop casino gaming from expanding to North Jersey and fought against misguided tax hikes, from sales to realty transfer to shore rentals to gas to water and even schemes to hike our tolls. I see the same misguided policies coming at us from Washington, and I felt compelled to run for Congress because the stakes couldn't be higher. Washington politicians are pushing reckless policies that would harm South Jersey. They're trying to force oil drilling on our shoreline. They're trying to gut Social Security and Medicare. They're trying to strip health care from millions of Americans living with pre-existing conditions. I'm running for Congress to rally like-minded problem solvers to do what is right regardless of political consequences. I'm Jeff Van Drew, and I approve this message. Paid for by Van Drew for Congress.
To protect his home and family from disaster, Steve used courage, wisdom, and his camera phone.
That should do it.
Way to go, Steve! By simply taking digital pictures of his family's important documents, Steve can always have them stored safely online, no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
The leaves are falling. While shopping for a new rake,
we will be back in less than 6 minutes, and it looks like it will be wide open forum. So let's get ready to do what we do. Open forum, Hurley in the Morning style. It doesn't get any better than that. 609-407-1450 phone lines are open. I'm going to give a standing ovation to Mr. Malamut for just a rousing edition of Chuck's program. Incredibly informative. And Chuck, I can't tell you how much I appreciate those clear and concise informational sheets. A lot of history in a condensed way that it was done.
You're welcome, Harry.
Very well done. 3 cheers to your team, to the research team at Morgan Stanley. And remember, for all of your financial planning needs, turn to Chuck Malamut, the Malamut Group, 609-383-2010, 609-383-2010. Open forum begins right now. Let's do this.
WPGG Atlantic City, WENJ 97.3 HD3 Millville. Everything you need to know in 6 minutes starts now.
His family is traumatized. I'm Dave Anthony, Fox News. Jamal Khashoggi's children put out a statement calling for an impartial, independent international commission to get to the bottom of his disappearance and presumed murder at the Saudi consulate in Istanbul, Turkey. Secretary of State Pompeo is in Saudi Arabia, thanked the king for committing to a thorough, transparent investigation into the situation involving the missing journalist.
As the White House monitors reports that Saudi Arabia may be preparing to admit that they accidentally